Hi everyone, welcome back to our channel Vinches, and in today's video we are going to see how we are going to forecast or project our depreciation and basic all the things which is required to calculate our capex, our PP&D, and finally our depreciation. Okay, so this is one of the containing video where we are try to solve our case study on financial modeling. And if you're new to our channel and you are watching it very first time, so I will suggest you please first of all watch our previous 3 to 4 videos that you will find in a playlist um, named as series 2 financial modeling series. And after that I will suggest you to come to this video and you will be most probably be able to understand all the things which we are going to cover in this video only. Okay, so for all those who have seen our last video, um, we have projected our income statement drivers, all the things which is required to calculate our IS drivers. Like we have calculated our GP margin, EBITDA margin, EBIT, PBT, and net income, and we have left only with only the two things, that is depreciation and second one is interest expenses, right? So in this video we will try to find out first of all the capex, then the PP&D, and finally our depreciation. Okay, so this is the agenda for the today's video. So let's come back to a case study, and we will go line by line. And we know there is an investor who is looking to invest in a Cinepolis multiplex company, and the key competitor for the Cinepolis is PVR and Inox. But now PVR and Inox are merged together and it is known as PVR Inox. Okay, so it is one competitor now, and we all know there is 320 million of debt, and company's debt to EBITDA ratio is 1.2x. We also have been given income statement for the company, balance sheet for the company, and we have हमने ये put in the recent videos हमने ये सारी information extract कर we have also put that in a financial model as well, right? So if we come to this section of the case study, that is part 1, assumptions and financial projections, we will came to know in this particular section we have given a line that company has 35 screens and will increase the screens in line with the revenue growth, that is approx 3% per annum growth rate in revenue per screen. So we are going to use these 2 to 3 lines in order to calculate our capital expenditure, in order to calculate our depreciation, in order to calculate our property, plant and equipment. Now the question is how. So no worries guys, just keep watching this video and you will be able to know how we are going to proceed with this, only with this information. Okay, the second information that we have is cost of setting up one screen is around 25 million. That is, if the company want to increase from 35 screens to 36 screens, then the company need to pay extra 25 million in order to fund that extra screen. And we also go have the data that extra 25 million for an extra screen will be funded by debt and the internal accruals. Okay, so we have all this information, and let's see how we are going to use this information to calculate our capex. Okay, so first of all let me copy this line from here, okay, and paste it here and write here as capital expenditure. Okay, so let's forget about formatting as of now, and then we can see how to format once we are done with all the things that we are here to understand, how to do all the things. So first of all I am doing nothing but I'm just extracting all the information which is given to us. First of all, we have a number of screens, right? So I will write here number of screens. It is in numbers, so I will write numbers, right? So we know the number of screens in the last historical period is 35, so we have entered 35 and this is NA, right? Now after this we have revenue per screen. So we can calculate revenue per screen and its growth rate. This is in percentage, again this is in millions. Now, not in a millions, this is in INR only, I guess. Millions making over. Now, how we can calculate revenue per screen? That is our total revenue that we have in the income statement. That is this one divided by number of screens, right? So in this way we can calculate our revenue per screen, but we do not have the number of screens for the future years. So how we are going to calculate that? We have the growth rate that is 3% per annum in the revenue per screen. So our growth rate is 3% here, right? Now, if I calculate revenue per screen for the future years, how I am going to calculate that? First of all, let me make you understand the formula that I will be using in calculating revenue per screen. So if I say like, how do we calculate growth rate? Growth rate is equal to current year figure minus previous year figure divided by previous year, right? But in this case, like we are not going to calculate the growth rate, we have to calculate the revenue per screen. First of all, let's see like how we are going to calculate the revenue per screen. Revenue per screen is equal to total revenue divided by number of screen, right? This is how we have calculated this figure 35.71, right? Now if I say that RPS for fiscal year 23, given that the growth rate for fiscal year 23 is 3%, what it means is RPS for fiscal year 23 will be equal to RPS for fiscal year 22 plus R RPS for fiscal year 22 into growth rate of fiscal year 23, right? Now if I take in common RPS for fiscal year 22, don't we get our formula as 1 plus growth rate for fiscal year 23, right? So this formula only I will going to use here, that is fiscal year 22 RPS multiply 1 plus growth rate of the current year. So I got our revenue per screen. Now how do I calculate the number of screens? In order to calculate a number of screens, what I need to do is I just need to divide the total revenue from the RPS to calculate number of screens. That is this revenue divided by this figure. So we will get our total number of screens. Now just to make a sense, we should convert it into absolute figure, because number of screens will not be in like वो numbers में नहीं हो सकता, it should be in absolute one. So this is how we can calculate our number of screens, right? Now in order to calculate our PP&D amount, what we will this is going to be our gross PP&D. PP&D means like our fixed assets, and we know like fixed assets like for the Cineplex, like for the company that is operating into एंटरटेनमेंट इंडस्ट्री, ठीक है? सो उसके लिए जो पीपीएनडी होगा दैट विल बी इज सिनेमाज ओनली, राइट? सो वी नो लाइक gross PPND, or I will say the capex first, like capital expenditure for the company. Okay, it will be the difference between this, because 35 screens तो कंपनी के पास पहले थी, right? Now we need to calculate the addition part, like how much the company have purchased in the fiscal year 23, this much, and if we multiply this with 25 in order to calculate our absolute figure in millions कि कंपनी ने कितना कैपेक्स कैपिटल एक्सपेंडिचर खर्च किया है in order to increase its screen from 35 to 42, right? In this way we can calculate our capex for the future years, and this will be in millions. All right, this is a capex. Now we go to capex. Now easily we can calculate a depreciation. Now how we are going to calculate a depreciation? First of all, in order to determine the depreciation, we need to find out the capex amount or changes in PP&D that will only equal to capex. Okay, so first of all the changes will be equal to this, right? Then we need to calculate the useful life of the asset, of an asset, that I will assume to be, it will be in years, 25 years. All right, now we need to calculate the depreciation. So first of all we have the depreciation of 60, or I can directly link it from here. That is, we have a depreciation of 60, and it will remain the same in the future years as well, because this depreciation is on the 35 screens, right? So we are assuming that company is going concern and it will not going to sell any of its assets in the future. So this 60 of depreciation will going to be happen in the future year as well. And this amount, that is 1678, is an amount which is spent by the company on extra purchase of a 7 units of screens, right? So we need to charge extra depreciation on it on the straight line basis. In the same way, we should fix this figure. We can charge a depreciation on this amount. In the same way, we can charge depreciation on this, and same way on this, and the same way on this. Now if I do a total of a depreciation, so I will get in a total of this amount. This is a total depreciation for the future years. Okay, so just for the formatting, what I am doing is I'm just adding the boundaries here. Okay, so we got a depreciation, we got a capex. Now let's go back to the income statement and link all this from here. That is from here. And we got a depreciation for the future years. So this is how we can calculate our capex, our depreciation, and in the next video we will see like how to calculate our debt, our internal accruals, and after that finally we will complete our three statement, that is income statement, balance sheet, and cash flow statement. I hope you got a fair understanding like how we have done all this, and if you have any issue, just ping us on the given mail ID and on the given contact number in the description of this video. Thank you. Thank you so much.